Hey everybody, I read an article about the debate on if you should do a cash out refinance right now or a home equity line of credit. But for those homeowners in Denver, Colorado, hear me out. If you have a large amount of equity in your home and those credit cards that you're making the minimum payments on and cash flow is a strain, you might be thinking about, should we do a HELOC? Should we do a cash out refi? Let's kind of break that down so you can think about this. I'm just going to give you some seed starters for you to be able to kind of think through this and determine what's the best play, if anything, for you regarding this equity in your home. The reason this kind of hits is because I actually have a really good friend and he is in upper management for a large retail facility, 1 million square foot. It's not Amazon, but asked him, are you noticing a slowdown in sales? And he said, absolutely. It's pretty brutal out there. So what I'm going to kind of talk about today is, look, if we have historical consumer debt on credit cards north of $1.2 trillion, with that level being 41% higher than pre-COVID levels, more and more consumers making the minimum payment on their credit cards is definitely a sign that we are reaching our threshold for spending and possibly even being overextended. So with interest rates on credit cards sometimes north of 20% or that 19.99% rate, you can see why more people are paying the minimum payment with all the other costs out there, like you're spending $6 for that dozen of eggs, etc. This is certainly a debate. We know the average homeowner has north of $250,000 in equity in their home, so therefore it does become a debate, especially if you're making minimum payments on their credit cards. I always like to ask a question. When people do pose the, should we do this? I ask them, how long has that credit card payment been a part of your budget? For a lot of people I hear, it's just there. And when that is the answer, or you're getting further behind, meaning the balance is growing, and the equity in the house is phenomenal. But let's talk about this, because then you can maybe use some of this information to decide, should you do either or of these options? HELOC, cash out refinance, do either of them make any sense whatsoever? So I kind of jotted down some notes here thinking about this. I think the first thing you want to think about is, how long are you going to be there? Because if you do think you're going to sell the next few years, then I will tell you that the HELOC is definitely going to be the better choice for you, simply because you can pay interest only payments on that home equity line of credit should you choose to. And I'll touch on kind of a little bit of an expansion of how those repayment terms work on HELOCs. But something to think about is, how long are you going to be there? The amount of debt you're paying. If it's credit cards and you haven't gotten ahead of them, this starts to become a cash flow decision. And even if I'm going to sell the house in the next few years, getting rid of it from the credit card balances into the equity of the house, we can all agree that if you sell the house down the road, it's very probable you take some of the proceeds and pay off the credit cards. So if you're feeling that financial burden, it might just make sense to do it now and do the home equity line of credit. If things continue to subside with inflation, we would see possible further rate cuts. And if continued rate cuts happen, then we could see that you actually save more money on those home equity lines of credit. So something to think about there. But the cash flow game, that is something to think about. Now, the next note I kind of jotted down here, how much you're going to be taking out. If it's 25, 35, 40 grand, this is a no-brainer. You would not look to do a cash out refinance. The HELOC is likely going to be the best play. Again, on a home equity line of credit, you pay what you borrow. So if it's $40,000 at X rate, you do have the choice, if you want to pay interest only on what's called the draw period. And during that time, that can help mitigate the overall expense. And if you were going to sell the next few years, that could be great, because we can agree then you're not going to pay off the house. People that buy your house are going to pay off your house. And therefore, it's all apples to apples at that point in time. Now, on the HELOC, as I mentioned, you're going to pay what is outstanding. So even if you opened a $150,000 home equity line of credit, but you only used $50,000, let's say, to renovate, pay off those credit cards, invest in the business, invest in real estate, you're only going to have a payment based on that $50,000. And if you take that number at the interest rate on a simple interest payment, you could choose to pay that every month should you want to. And again, if you're going to sell the house in the next few years, maybe you do that, knowing that you will sell the house and that will pay off the home equity line of credit in full at that time. I do want to bring up an important consideration though, because I also thought about this. A lot of y'all don't know this, but if you take out the HELOC and later you have a first mortgage and later you want to combine the home equity line of credit and the first mortgage, that is then called a cash out refinance. And at that time, you will get a higher interest rate than the person if they have done a cash out refinance and refinance that later to a lower rate. That's not. It's called a rate in term. Those have lower interest rates. That may or may not be an important consideration to you. It is just something that I knowledge drop to everybody, but a lot of people are more focused on now than then, which I understand, obviously. Look, let's think about some other uses for HELOCs. I've done this 4 times, but some other uses for HELOCs can help you grow wealth. If you have a substantial amount of equity in your house, you could actually do a home equity line of credit and use it as a down payment to buy, whether it's a short-term rental, long-term rental, commercial building, etc. So you can do that. What else can you do with a HELOC? Well, I've got many clients over the last few years that they don't plan to stay. In fact, they're going to sell their house. And so this is the one mistake I see a lot of homeowners make is they wait until the end to decide. Then the reality is the equity is trapped in the house. And when they go to buy the next house, a lot of people do want to buy before they sell. Now, the challenge this creates for you is if your asset is tied up into the house and you don't have the savings for that down payment on the next house, you want to do a home equity line of credit. You don't have to draw against it. You can open the home equity line of credit, keep a zero balance. There's no payment on that money until you draw on it. But if you go to start a HELOC application with a lender, you may run into challenges because if your house is listed for sale, you might not get that home equity line of credit. And so it could slow down buying the next home. My advice, get the HELOC early before you need it, because at that point in time, you have it. And you can always close a HELOC if you decide not to use it. Yes, you paid some nominal closing costs, but those closing costs are very low. So overall, overarching theme, if you have one of these mortgages from during COVID times, your first mortgage, and you're sitting there in the 3s, it's very probable that the HELOC and the rate of the first mortgage, what I would call blended cost of borrowing, you put those together, it's very probable it could make more sense to do a HELOC than to do a cash out refinance and sacrifice that lower interest rate. But I have a client right now and his rental is almost paid off. Now on a fixed rate mortgage, those payments don't change. So realistically, in his situation, taking out the $100,000 HELOC, he's gonna save $300 a month by doing a cashed out refinance. And yes, he will be letting go of the lower interest rate mortgage. Now in his case, he's taking out the HELOC to buy a rental, so growing his wealth with that equity in the home. So there's a lot of things there that I talked about regarding the cash out versus the HELOC. Most importantly, just find a really good lender. Find someone with really good reviews, someone that will take their time, talk to you, making sure that you get the answers you want, because these are big life decisions. We're talking about, $150,000 HELOC. That's not chump change, everybody. And if you're out there struggling with those credit card payments, you're paying the minimum payments, one thing we know is those balances are not going down very fast. Think about it. I have a video on my website specifically explaining HELOCs. It might be worth your time to check out further. If you like this type of content, this educational type of content, please, by all means, I would love for you to join the Mortgage Maestro family. Subscribe for more information like this. I do lives about once a week to try to come up with topics. If you have some ideas for things to discuss, shoot me a message. You can also find me on LinkedIn. But if you want to chat specifically, schedule a one-on-one, calendly.com/Mortgage Maestro. Have a great day, everybody.